Hello everyone, and welcome back to another pre-market analysis. So usually I look at Euro USD and gold going to the week ahead, but today I'll be looking at crude oil because of what I've been seeing over the weekend, the geopolitical tensions and everything. So if you go to Reuters website, you can see oil jumps 10% on Iran conflict and could spike to $100 a barrel, analysts say. So usually when there is war and geopolitical tensions, you see crude oil going up or going long or bullish. So this is on the fundamental side. This is the reason why I believe oil is going to be bullish because of this geopolitical. But that alone is not enough to help you to pinpoint an end point that you can use to trade. So just by looking at all the articles you can go through, Wall Street Journal, Reuters, and all the financial websites, you can see that they are all anticipating oil to be rising. Reason being this trend of Hormuz, if it's closed, which I believe it is now because of the Iran-US geopolitical tensions, oil price is going to go up. So now if we go to TradingView, you can see that this is how oil prices has been delivered for the past few months. It has been bearish. So I drew this line chart before it was a candlestick chart. You can see price has been bearish. But if you want clear price action, you can use the line charts, which I did. And you can see that price was already going near this support area before the market closed. And for that reason, because you've had these geopolitical tensions, I'm expecting that price, when the market opens, is going to break out. Then it's going to retest and then maybe continue bullish. And if you go to the Reuters website, you can see they are anticipating that price is going to spike to at least $100 a barrel. So now if you look at the current market price, you can see it closed at $67 a barrel, but they're anticipating that price will go to at least $100 a barrel. So this means if this ongoing war keeps on happening, you may take profit at around this area, which is $100 a barrel. But if you want to be taking partials along the way, you can make use of these liquidity areas which were left behind as price was in a bearish momentum. So we have these liquidity zones, but this is daily time frame. Keep this in mind. So on these liquidity areas, you can be taking partial profits as price will be delivered during the course of the week. With these adjustment areas and liquidity areas. So now you can either decide to take an entry when the market opens and just wait for take profit at $100 a barrel, or you can start taking partial profits as price starts taking liquidity that was created as price was being delivered to the downside. So these are the major areas which all support levels or resistance levels here, which were points where price started very strong bearish momentums from, right? So you can see that there were many traders who sold at this area, many traders sold at this area and this area. So you can use these areas for partial profit taking. So this is what I have on crude oil, but this is for daily time frame. So for a bit more clarity, I'll switch to the 4-hour time frame, see like what the market structure is as per smart money concepts. So now if I just delete everything I have on the daily chart, I have a clean chart, then I'll switch to the chart candlesticks, and then from here you can see that price is clearly in a bullish momentum, and here price took out an adjustment, and when this adjustment was taken out, it validated a new valid higher high, which is this one right here, which also led to a new breakout structure being created, suggesting that our price may continue bullish. And after that, we have another lower high created here, and the lower high was validated when price created a breakout structure. Then after that, price took out another adjustment here, making a new valid higher high, which was at this point, and this higher high has transferred to the highest point when this point was liquidated. So how this works is if price creates a higher high and then it's liquidated, there's no full body candle close, it's just a wick. This would be a liquidate grab, which means the high high will be transferred from this level going to the highest level we currently have, and this adjustment will also be transferred to this area. And since it's not yet mitigated, I use this sign to label it, which is IDM. So this will be the current market structure on the 4-hour time frame on crude oil. So when the market opens, I'm anticipating two things. and the price is just going to go bullish straight away, because you can see the 4-hour candles were already in a bullish momentum. So that may just continue, and then you see another bullish push and another structure being created. But since everyone is buying, I believe maybe there'll be some liquidation before price actually goes up. So if price doesn't directly go up, it may come to rebalance these imbalances that were left behind, and after that you may see a bullish continuation. So if you want to buy, you can buy from the current market price when the market opens. We can wait for some extra confirmation. So this is what I have on crude oil. On the next video, I'll be looking at gold. Hopefully I'll be uploading that video before the market opens as well. But if you have any questions on crude oil, just comment below and I'll be answering all the comments.